This week we had a ton of morning panic, so we're going to start off by using a winter analogy to describe how the morning panic works. So imagine you're skiing down a very steep valley and you hit the bottom of the valley. You gain a ton of momentum. The most momentum that you have is at the bottom of the valley, and then you use that momentum to ski up the other side of the valley. And what happens is you're fighting against gravity. So you're not going to go all the way back up to the top of the ski slope. You're going to go maybe 50%, and then you're going to come back down. So that's what I want you to picture when you're defying the morning panic. You got to know that the momentum is on your side the most at the start. So you gotta remember that. You gotta not hold and hope these plays. You gotta not hope you're gonna get back to the top of the valley. And that is the analogy I'd like you to visualize for the entirety of this lesson. The first stock of the day is NLST. This happened on Monday, December 6th. And we see that it had a very big panic from pre-market into the open, and it continued to panic downwards. Now, this was a classic OTC morning panic. My main issue with it is that the level 2 had some fake out bounces. As you can see, this bounce and this bounce, those are fake out bounces. So the level 2 was a little tough on this one. But once it started bottoming again, you were able to ride the momentum all the way to the 580s. Now, I was exiting in the 550s, and that was great. The panic here was 31%, and the bounce was 26.1%. Usually, I wouldn't hold for that long. I was exiting in the 550s right here because that's where I thought it would top out, but it went a lot higher. And it went so much higher that I decided to short the bounce. So once it hit the 580s here, I started shorting. So I was reading level 2 here, and I shorted in the 580s, I believe. It hit 589 right here, and I shorted in the 580s. I was aiming to exit it in the 540s, but it did not get to that level. So I started covering on pulls, and I covered in the 560s. So every time I pulled to the 560s, I covered a bit and covered the rest to the close. It didn't do what I wanted to do. Skiing analogy works for most examples, but sometimes, there's just that momentum that keeps the stock chopping into the close. It doesn't necessarily pull back down a lot. Something to keep in mind. The next stock also happened on Monday, December 6th, and this was BuzzFeed. BuzzFeed IPO through a SPAC, and it had this initial morning spike, but that quickly turned into a panic. And I was watching this very closely, especially when it halted here. I did bought it in this level. This wasn't an ideal SUPERNOVA halters chart. This was an okay one. It did have the halt. It did have multiple red candles in a row, but it just didn't bounce as much. I don't know if this was because it was a SPAC and the 10 level was very important. I don't know why, but it didn't bounce as much as I thought it would. I exited this one for a scratch. Panic here was 45.8% from this top to the bottom, and then it bounced only 18.4%, which is very lackluster. I usually expect these to bounce a lot higher. I thought this would get over 10, mid 10s, but it did not. The next stock is also a SUPERNOVA halter panic, but it's a very different looking chart from the previous chart. So this was an IPO of IMPP, and as you can see, it started trading at 40 cents and got up all the way to $8.3. This one was very, very liquid. So even though it did fit my pattern, I was just too scared to trade it. So I didn't trade this one. I panicked to the 350s, and I could have traded about a maximum of 600 shares when it hit the bottom here, because the volume up to that point was around 60,000. So I have my max position size set at 1% of the volume to that point. That's roughly a $2,000 position, and it would have been a pretty sizable gain if you timed it properly. If you got in on the bottom, you could have made a few $100, and that's pretty substantial, even on illiquid plays like this. So the panic here was over 57% from top to bottom. And then it actually bounced 130%, which is ridiculous. Usually these don't bounce that much, but a rare occasion they do. I would not recommend trying to hold to the back to the top of the valley, as I was saying. I would honestly would have been selling in the 5s or 6s, but that's still a 30 to 40%. So if you have a $2,000 position, you cut it at the bottom, you're making $600, $800. That's pretty substantial. That's why you have to have these types of plays on your radar. Don't trade them if you're not experienced. These are pretty tough to trade, but once you get the hang of it, you can use that analogy of skiing to play these charts. Obviously, keep your positions smaller than usual because you're going to have bigger, quicker gains and also bigger and quicker losses. But I wish I traded this one. This was just so liquid. I wasn't comfortable, but looking back on it, I should have traded. Last play we're going to look at happened on Wednesday, December 8th, and this is a listed panic. So what happened was there was a short report released in the morning, which caused this massive sell-off. It was very large. It sold off over 55%. Keep in mind, this is a real company with a $4 billion market cap. So a big sell-off like this would tend to lead to a bounce. Obviously, I was watching this very closely, drawing trend lines and whatnot, and then once it hit this 43.1 level and started bouncing, I was interested. And then it halted. And I didn't end up getting on the halt because it just happened so quick. I was used to seeing just a slow fade. I was not expecting that. I've never seen a stock, have this kind of slow fade off, sell off, and then have this really quick spike up and then halt. I've never seen that before. Wasn't expecting that. So it halted up, and that was caused by a buy report initiated by Citron Research. Here you can see that there was a clean panic until the reversal. Not super clean, but like most of these candles were red, couple bounces. And what interested me wasn't just this action, because this does look more like a fade, I will admit. What caused me to buy this was this big volume spike right here. That's what caused me to buy it. So this was a downtrend line across. Ideally, I would have gone in the 47s, but it just halted up so quick. And I was just selling into the 60s. I got in just in the 49s, I believe, and I was selling in the 60s right here. There's like a pretty big wall level too, but honestly, I should have waited for the volume ramp right here. This was a lot of volume here. I should have waited for that ramp. I exited way too quickly. I just wanted to take my profits, honestly. I didn't know how high it could bounce, but it did end up squeezing here. So this panicked over 55%, and then it bounced 57%. That's pretty substantial. I wasn't expecting that. I did exit too early. I should have waited till the 64s to exit, but I just exited it all in the 60s. NVEI actually turned it into an amazing bounce short. A couple indicators here were that it bounced a lot more than anticipated. I think I was risking this open level of mid 70s, and then I was able to short sell into this volume spike. I think I got some in the 65s. I shorted just because it was so unlikely for it to bounce that high. That usually doesn't happen. I was expecting much lower. After I shorted the bounce, I waited and then I covered into this afternoon pull right here. So I was covering in the 58 to 59 area. My actual target was 58, but because it wasn't hit by 3 o'clock, I just scaled out into power hours. So I got some covers in the 58 area and some in the 59s. And that was a pretty good trade overall. You don't see these very often. You gotta pick the best ones, because when you pick ones that aren't so good, they just tend to fade all day and they don't bounce, and then you're struggling. So you gotta look out for those indicators, which is proper panic. This, big panics. This panic 50% from its tops. Real company. That's a very substantial move. And then you're looking for that big volume spike also. So that's very important. It's tough to trade these listed panics without that indicator. And then you're looking for it to cross over a trend line with a green candle. So this is the big green candle, cross over the trend line, boom, I'm in. And I'm just riding it like a skier. I'm using the momentum of it to just ride it until I feel the momentum is gone. Then I get off. I go back onto the ski lift, and I use the lift to go back down. I don't know if that analogy works, but there you go. Thank you for tuning in to another weekly trade recap. I will see you next week.